All right, so you've been doing your homework and you realize that DSCR loans are a fantastic mortgage option when buying a rental property. But in this video, I'm gonna go over 9 secrets that you most likely don't know. But first, all right, so DSCR loans, fantastic loan options when buying an investment property, okay? And I'm gonna go over 9 secrets that you absolutely have to know and why it's a huge benefit to use this loan program when buying investment properties. Number 1, which is the big piece, is it's not looking at your income at all. It doesn't care what your job is, your business income, any of that. It's purely looking at what the property would rent for versus the mortgage payment, and that's how it's going to approve you for the loan. Number 2, it allows the seller to pay up to 6% of the sales price toward your closing costs. This is a massive amount of money, and on a conventional loan, they only allow up to 2% that the seller can pay of the closing costs. So you can negotiate to have the seller pay a ton in closing costs, greatly reducing your bottom line and getting you into the property for less down payment, less money, and this would allow you to get into the property with less money needed than a lot of other mortgage options. Number 3, you can close in your LLC or even a trust. I do it all the time for clients. The big piece to remember is the LLC or the trust needs to match whoever's on the loan, right? So the loan is being done under you as an individual, your credit, right? Your social security number, all of that. But the title work is going to be done and closed in the name of the LLC or the trust. Conventional loans don't allow that. They have you do the loan under you. It's got to close under you as an individual. So an additional advantage to doing a DSCR loan. The minimum down payment is 15%, right? On conventional loans, you're gonna have to put down normally 20 to 25% down payment. So reducing how much money you need out of pocket by using a DSCR loan. You can actually finance over 4 units. So on residential mortgages, it's for 1 to 4 units. Single family, duplex, triplex, fourplex. But I've got options on the DSCR loan where we can finance 5, 6, 7, 8 units. So the example I have right now is someone is buying 2 4-unit properties. So 8 total units. It's on one piece of property. It's an 8-unit property. That would be normally a commercial loan, which they're not gonna get approved for, right? But on my DSCR program, we can get that property financed. So giving you way more options as you're shopping for an investment property to be able to look at these versus what you'd be stuck with if you were using a conventional loan. We can add asset-based income calculation to your DSCR loan options, right? So let's say that the property doesn't qualify. We can take your assets, kind of calculate an income based on what assets you have and use that to help you get approved for the DSCR loan or get you a better rate along with that. So it's kind of like a combo loan, a hybrid loan in that regard. You can actually lose money on the property and still get the loan approved. So yes, in general, they want to look at that the property will rent for what the mortgage payment is going to be or rent for more. But you can actually have it be renting for less than the mortgage payment and still get approved for the loan. It's going to affect the rate, the cost of the rate, and possibly your down payment. But if you're buying a property purely based on, man, there's a lot of equity or it's going to go up a lot in value, and that's part of your investment plan, even though it may break even or lose money month to month on the rent, you can still get approved for a DSCR loan. There's no cap on how many properties you can get financed with using a DSCR loan. So on conventional loans, you're maxed at 10 financed properties. So 10 properties with mortgages on them. Okay? DSCR loans, you can go way past that. You can technically have an unlimited amount of rental properties while doing a DSCR loan. So another huge advantage in that regard. And the interest rate. Many times you'll see, oh, the interest rate is going to be worse on a DSCR loan than it is on a conventional loan. That's not the case. Now, it does depend on your credit score, your down payment, what it would rent for, so there's some factors. But there's many clients I've worked with that we used a DSCR loan because it gave them a better term than what a conventional loan would have given them in that situation. So that right there is 9 secrets that you absolutely have to know about a DSCR loan and why DSCR loans are just badass loan options. Hope you found this information helpful. If you did, I'd love to be your lender, and stick around for this next video. Think you're gonna like it.